By the way, this shows you just how depressed the bank sector was when we've had this little bounce. This is the bank index, KBW Bank Index, relative to the S&P. And the start point is the 2016 election. That's right here. You see they went straight up with the election. Basically, that election said deflation fear is over. Rates probably going up, faster pace of growth, and deregulation for banks. It all worked. And then they didn't work for very long, though. You see the relative performance has been bumpy over here until this year. When everyone loved the banks at the beginning of the year, they went down like that. So what we've seen now with this bounce is right here, they had given up just about the entire outperformance since the election, right? 100 means both it's even with the S&P 500, and now that's the little bounce today. So you could not say it's a comeback for the banks, but it is part of this theme of the sectors that have been beaten down the most for weeks and months before October are starting to see a little bit of a lift, starting to suggest maybe those parts of the market are a little bit washed out.
And that would be a positive thing overall.
It would be a net positive in general. It's obviously a very big group for the market. If technology obviously is still under pressure, I don't think it's enough to get the overall index moving, but it does show you some differentiation happening here.
But we also had a fairly big regional bank, used to be called Bank of the Ozarks, Bank OZK, lose what, 50% of its value. All of a sudden, its underperforming loan book was exposed to the world, and the market tanked it. So there are some external factors that might be spooking people on this.
Well, and that happened the last few weeks. That was over here. The regional banks just really did accelerate to the downside after that OZK move. Absolutely, Brian.